everyone. A very bright Monday morning, and welcome to your weekly outlook, your weekly market outlook with me, Geoffrey Gishanga, educator and market analyst at Scope Markets Kenya. So let's get to see what happened last week. I hope you all had a very amazing weekend, and let's see what happened fundamentally last week, and what we are expecting for the week that starts off from today. So last week we had quite a number of fundamentals, major fundamentals from the Reserve Bank of Australia releasing their monetary policy statement, to the U.S. government, shutting down. We also had the USD. We had the USD JOLTS job openings. We had the USD ADP non-farm employment. However, after the US shutdown, we were anticipating for the US non-farm payrolls. They were not released on that Friday because of the shutdown, and they were postponed to the 10th of October. However, that still remains tentative. So any major news that is affecting the US dollar has been made tentative due to the US government. We're going to go into the in-depth of what it is and how it's affecting the US markets. Also, in terms of earnings, we had earnings released by Nike last week. So let's get to see what we are. Let's get to see what happened last week in depth, and what we are anticipating for the week as we start off this new week from today. So walk with me and let's get into it. So starting off with the Australian Bank of the Reserve Bank of Australia policy rates decision. So the Reserve Bank of Australia maintained its policy rate at 3.6% in its October meeting, in line with the expectations. Okay, the forecast that was mentioned. So this marks the fourth consecutive hold cumulative rates. This marks the fourth consecutive hold following cumulative rate cuts of 75 basis points earlier this year, as the central bank continues to balance inflation containment with economic growth. So when we were starting off the year, the Reserve Bank of Australia was very steady with cutting rates, but now at least we've seen them maintain the rates. So are we going to see the same trajectory as we get to approach the end of the year, or will we probably have a potential rate cut, one more rate cut or one more rate hike before the end of the year? So chances are high we might actually see them maintain the rates until the end of the year. But that is something we can only wait until the actual releases happen, then see if we have a potential. If you have maintaining of the rates, or you have a potential rate cut or a rate hike. Okay, so looking at the in-depth data of that. So Australia's headline inflation for August 2025 came in at 3%, its highest level since July 2024. So the largest contributors were housing, which is a positive of 4.5%, food and non-alcoholic beverages, that is at a positive of 3%. Then you have alcohol and tobacco at a positive of 6%. Okay, then the trimmed mean inflation, a key measure of underlying price pressure, stood at 2.6%, slightly down slightly from 2.7% in July, keeping it within the Reserve Bank of Australia's 2 to 3% target range. Then the RBA noted that is now the Reserve Bank of Australia. They noted that recent data, while partial and volatile, suggests that inflation in the September quarter may be higher than expected at the time of the August monetary policy statement. Then you have the economic performance for Australia. So Australia's economy expanded 1.8% year on year in the second quarter of 2025. So outperforming market expectations of 1.6% and marking its fastest growth since September 2023. So on a quarter-over-quarter basis, the GDP grew 0.6%, slightly higher than the 0.5% forecast. So this strong growth was supported by the robust domestic consumption and rebounding private demand, giving the Reserve Bank of Australia confidence to hold rates steady. So the Governor Michelle Bullock reiterated that monetary policy remains data dependent, noting global uncertainty but assuring readiness to respond to external shocks. So there was a projection that core inflation will ease to 2.6% in the third quarter of 2025, paving the way for a potential rate cut in November and possibly another one in the first quarter of 2026 should inflation remain contained and unemployment rise modestly. Okay. So with looming expectations or anticipations of a potential rate cut in November, but still from the pattern that we have seen the Reserve Bank of Australia take, we might see a potential maintaining of the rates, but we can only wait until that time. So November, let's wait for the monetary policy stance in November and see if we'll actually have a potential rate cut or not. Then you have the U.S. labor market, that is the U.S. jobs job openings. So as per the Bureau of Labor Statistics, the job openings remained unchanged at 7.2 million in August 2025, with a job openings rate at 4.3%. So the notable changes by sector, we do have construction, negative 115,000, then the federal government, a negative 61,000. So hires and separations both held steady at 5.1 million, reflecting a labor market that remains resilient but shows early signs of cooling. Okay. Then you have the US ADP. We have the US ADP non-farm employment. Now, this is usually a projection of what to anticipate for the non-farm payrolls. But this time round, we only had the ADP non-farm release. Then we didn't have the non-farm payroll release again due to the US government shutdown, and it was postponed to the 10th of October. So let's see what the ADP non-farm employment projects for the non-farm payrolls. So the private sector payrolls declined by 32,000 in September, signaling the first contraction in several months. So the ADP report also underwent a benchmark revision, reducing total jobs by 43,000 due to recalibration against 2024 census data. Then the employment downturn was broad-based, with manufacturing, professional services, and trade sectors showing the sharpest slowdowns. Okay. Then you have the US ISM manufacturing PMIs. So the ISM manufacturing PMIs rose slightly to 49.1 in September, up from 48.7 in August, but still remains below the 50 threshold, indicating continued contraction in the manufacturing activity. So an ISM above 50 shows positive, then below 50 shows negative. So in this case, you're still below 50, it's at 49.1. It's an improvement from 48.7, but it's still below the 50 threshold. So indicating continued contraction in the manufacturing activity. So the key components breakdown, we have new orders index at 48.9, that is down from 51.4. The production index was at 51, that is up from 47.8. Then the prices index was at 61.9, down from 63.7. Then the employment index was at 45.3, up from 43.8. Then the suppliers deliveries index was at 52.6, that is up from 51.3. Then the report highlighted moderating demand and persistent cost pressures, although delivery times lengthened slightly, hinting at improving supply chain conditions. Okay. Then we get into now the U.S. government shutdown. So the U.S. federal government officially shut down on the 1st of October, following a deadlock in Congress over short-term funding measures. So some of the key issues discussed was the Democrats pushed to extend affordable care. The Democrats pushed to extend the Affordable Care Act tax credits, which Republicans opposed. Then approximately 750,000 federal employees faced layoffs, costing an estimated $400 million per day in compensation, according to the Congressional Budget Office. Then both parties are engaged in mutual blame, with top Democrats citing Republican healthcare obstruction, while the House Speaker Mike Johnson accused Democrats of making unrealistic policy demands. So the Business Roundtable, representing leading US CEOs, urged Congress to act swiftly, warning that a government shutdown will create uncertainty, disrupt critical services, and harm American businesses, workers, and families. So the shutdown is expected to impact the GDP growth in Q4 2025 if it prolongs beyond 2 weeks. So this is approximately, we're still within the first, considering it started on the 1st of October. So we are almost about now within the first week. We are almost ending the first week of the government shutdown. Let's see for how long that shutdown will take, because again, if it takes longer, then definitely it's going to also affect even the U.S. economy. It's going to affect the U.S. markets, and definitely that will have a ripple effect of all the dollar on all the dollar pairs. Because of that, definitely we will be expecting dollar weakness. So with dollar weakness, then with having a potentially weaker dollar due to the shutdown, then definitely it will have a ripple effect also on the financial markets across all dollar pairs. Okay, so it's something to closely observe. Even as you get into ending the first week of the shutdown and getting also into the second week, for how long will you see this shutdown occur? And what do we expect as speculators in these financial markets? Okay. Then you have the CPI for we have the CPI release for Switzerland. So the CPI fell. That is now affecting the CHF. So the CPI fell 0.2% month on month in September, bringing the annual inflation rate to a positive 0.2%. So some of the key drivers were, we had declines in hotel and accommodation prices, international travel, and air transport. Then we had increases in knitwear, furniture, and berries. So the Swiss National Bank views inflation as broadly stable, maintaining policy flexibility while supporting overall price stability and economic development. Okay. So then you have the U.S. labor market outlook. So it still remains tentative. Hourly earnings, the non-farm payrolls, NFP, and the unemployment rate for September will remain stable, with moderate wage growth expected amid softer labor demand. So further insights will depend on official data releases later this week. So the average hourly earnings, the weekly unemployment rates, and the non-farm payrolls have not yet been released. They still remain tentative due to the U.S. government shutdown. There's speculations, or even from the economic calendar, that the non-farm payrolls are meant to be released on the 10th of October. That is now this week, because the non-farms are usually released on the first Friday of every month. So, but this time round, it will be released on 10th of October. That is now this week. Again, it is still tentative. It can only be confirmed. It can only be well confirmed on that day. But so far, it still remains tentative, as much as it has been postponed to the 10th. Even on the economic calendar, as you check, it still remains tentative. So tentative meaning it may be released, it may not be released. Okay. Then we go to the corporate earnings. We had Nike releasing their earnings. So the earnings are as follows. We have the earnings per share at $0.49 versus the expected $0.27. The revenue was at $11.72 billion versus the expected $11 billion. Then the net income was at $727 million, down 31% year on year. Then the gross margin was 42.2%, down 3.2%. Down 3.2%. Then Nike reported unexpected sales growth, but profitability remains under pressure due to high tariffs and sluggish performance in China and Converse divisions. So then we have segment performance. So you have wholesale revenue at a positive of 7% to $6.8 billion. North America positive of 4% to $5.02 billion. Then you have Nike Direct, so that is retail and online, down 4%. Converse down 27%, and China down 9%. Okay, so Nike projects or expects the Q2 revenue to decline by low single digits, primarily due to weaker global consumer demand and the ongoing tariff burden, estimated to cost $1.5 billion the fiscal year. Okay, so a summary outlook. So Australia, we had inflation nearing target. The rate cuts are possible in late 2025. That is now November. Then the U.S. job market showing cracks, and manufacturing contraction persists. Remember, we've seen the PMIs coming out at below 50. Then for CHF, in Switzerland, the stable inflation supports accommodative policy. Then you have fiscal uncertainty in the US adds short-term downside risk to global sentiment. Remember, now the uncertainty comes from the US government shutdown. Then in corporate earnings, you have Nike's earnings beat expectations, but highlights structural recovery challenges. Okay. Now let's get into what we will be expecting from today, coming now into this week now from today. Today we will be having the European Central Bank President Christine Lagarde speaking at 8 p.m. Then also we'll be having the Governor Andrew Bailey speaking for the Bank of England at 8:30 p.m. Then on Tuesday, that is tomorrow, we don't have any high impact news. On Wednesday, we will be having the Reserve Bank of New Zealand releasing their monetary policy statement at 4 a.m. Then we will be having the Bank of Japan governor speaking again at still the same day. Then at 9 p.m. we'll be having the USD FOMC meeting minutes. Okay, that is confirmed. The meeting minutes for FOMC, that is different from the actual FOMC that releases the policy rate. Then we have on Thursday 9th, we will be having the unemployment claims for the USD. Still shows tentative, but it's meant to be released at 3:30. Then we have on Friday 10th of October, we'll be having the Reserve Bank of Australia governor speaking. Then the Canadian unemployment rate will be at 3:30 p.m. That is now on Friday, October 10th. Then the anticipated non-farm payrolls, the anticipated non-farm payrolls, also at within the same time, but also still showing tentative on the economic calendar. So the tentative events are subject to delay, revision, or cancellation. Okay, and we also have the unemployment rate as well at on Friday, the 10th of October. We also have the USD prelim consumer sentiment and the inflation expectations also being released on that 10th of October. So 10th of October is a very key. 10th of October is a very key day for the US dollar, because now we get to see, will we have the unemployment rate released? Will you have the non-farm payrolls released? Because most of these USD news are supposed to be, most of these USD news are supposed to be released on 10th of October, but they are all showing tentative on the economic calendar, meaning that they are subject to delay, revision, or cancellation, and that is due to the US government shutdown. So it's a very key week to observe and see what happens to the dollar, what happens with the government shutdown. Will it still get to continue? Will it be halted? So it's something to closely observe and watch out for. So with that, guys, thank you for joining in and tuning in. I wish you all a very fresh and productive week ahead. So stay blessed and stay financially literate, and I will see you on the next one. Have a good one.